welcome to another Smaulgld live stream. It is Tuesday, the 30th of April, 2019, and tonight's topic is what happens after a bubble bursts. We're going to take a look at some prior bubbles, and then we're going to look at current activity in the cryptocurrency space and I'll give you my take, and then we'll get your thoughts on that in the comments after we go through some of the stories for the day. Got a shocking Trump statement on the Fed that we're going to get to. Some typical Chinese news on the way they run their economy. A little bit of Moronica. But let's first take a look at the markets today. The Dow Jones, NASDAQ, S&P pretty much all in a very tight range. Dow Jones up just a little bit to 26,592, and it was up 0.15% or 38 points. NASDAQ was down 0.66%, and that was down 54 points, down 8,095, and the S&P 500 up 0.10%, just up about 3 points to 2945. Gold and silver up just slightly, a couple of bucks for gold, a few cents for silver. Silver and gold both below their psychological numbers. Gold below 1300 at 1282.40, and silver below 15 at 1492. Gold silver ratio about the same. All right, let's get a look at some of the stories of the day, and then we're going to dive into this. What happens after a bubble bursts? What do you think are some typical behaviors? Then we're going to try to analyze bubbles according to, I see some bubbles I think are one-off events, and others are just market exuberance in a particular area, and it reaches a furor or a blow off top, and then it collapses, but then it rises again. And we've seen that in the NASDAQ. We've seen it in stock markets, where stock markets get into bubble territory. It doesn't mean once the stock market goes down, then it's finished forever. It just means that it got overvalued, and that's typical. You see it in gold and silver. You get periods where a particular asset gets overvalued and then it gets undervalued, and that's just part of the normal ebb and flow. I'm not quite sure you would call that a bubble. We'll talk about it in a minute. Let's just get into the markets. Very interesting. First of all, there was this poll done by Reuters. A majority of economists say major central banks are done tightening policy. Well, the only bank that I'm aware of that was really even doing any tightening was the Fed. I mean, because the ECB had the zero interest rates, wasn't changing those, was still doing QE, really hadn't stopped that. The Bank of England, well, maybe they were tight. They raised rates a little bit. China is on full-on accommodation. Japan is still on full-on accommodation. So I'm not quite sure. There was no link here to find out what they were talking about. You might be able to say the Fed is done tightening because they've seemed to have given signals that they're not going to raise rates if they do until next year. And then a lot of people think at some point, myself included, they might even lower rates this fall. And here's the shocking thing that Trump said today. Now, if you may recall, I don't have the tweets here, but he was very concerned before he got elected that the United States economy was in a big bubble, and the only reason it was there was because of not only just QE, complained about that, but then closer towards his election in 2016, he was saying that because of low interest rates, that's why we have this economic activity. You take that away, and we wouldn't have the economy, and it's all going to collapse. Well, listen to this. So today, he tweets out, China, and we're going to get to China today too, is adding great stimulus to its economy while at the same time keeping interest rates low. Our Federal Reserve has incessantly lifted rates even though inflation is very low, and instituted a very big dose of quantitative tightening. Now, one tweet is not enough, so he's got to carry over, and he says, we have the potential to go up like a rocket if we did some lowering of rates, like 1 point and some quantitative easing. So he's advocating to just pedal to the metal, drop the interest rates right back down to zero. Well, you know what? Go negative and do quantitative easing. And he says, look, we're doing well at 3.2 GDP. But with our wonderfully low inflation, we could be setting major records and at the same time make our national debt start to look small. I don't think he understands. And when you do, I don't know what kind of quantitative easing he's talking about. If he's talking about buying U.S. Treasuries, that's not going to lower the debt. But maybe he's talking about the new type of quantitative easing where you print money and you buy stocks. I don't know what he's talking about, but this is quite unique because the idea and the audacity of quantitative easing came about with the idea that, well, the economy is struggling and we want to make sure that we don't slip into a depression. So we're going to help it out a bit by just printing a bunch of money and buying mortgage-backed securities, as the U.S. did, and U.S. Treasuries. Now, what European Union did, the ECB, they bought corporate bonds. Other banks, Swiss National Bank buys stocks, and you can understand how a central bank can goose the economy. But generally, they do it, or they have been doing it because there's no economic growth. Trump is actually saying, yeah, it's okay. We're doing good enough. We're doing fine enough at the GDP at 3.2, but yeah, well, we can light this fire a lot more if we just did a little lowering of interest rates and did quantitative easing. I'm not quite sure what type of quantitative easing. Quite shocking. Now, you would have thought, well, I guess they realized that Trump doesn't have much impact on the Fed to make that happen, but gold and silver did not really react to that very much. I mean, they could have been up or down today for any particular reason. It didn't have a big impact on the economy. I mean, the stock market or gold and silver prices. But still, I think it's be like China, do quantitative easing. Now, it is true. China has been on a mega growth path, and it's all been fueled by debt. And the only reason that China is doing more of it, I'll just give you an example of what they said today. We saw the bicycle example yesterday where they just made a bunch of bicycles and no one bought them, and they're just going to have tens of thousands of bicycles. But China is based on printing money, lending money via state-owned banks to state-owned enterprises to make stuff that they don't need. And that's how they build their GDP. A lot of it's real estate. They build bridges to nowhere, skyscrapers that no one's going to live in, produce a lot of cheap goods and so on. But that's how they built their economy. And as the economy slows, the only way they know how to stop it from slowing is to print more money, do more government programs, and so on. And their issue is much different than the U.S. issue. If the Chinese economy slows, they've got much bigger problems than the U.S. because China has moved the equivalent of the entire population of the United States in the last 20 years from the countryside into cities with the understanding there's work for them to do. Well, if the economy slows and they can't keep building stuff that no one wants, they run out of places to build, they're going to have a problem because those people are not going to sit kindly to not having a job. They don't quite have even though they're a communist country, from what I understand, they don't have the social safety network as much in place as more Western countries have with the social security, the social welfare, and so on. So what they do is they just keep printing, they just keep doing projects and they hope it all works out. Now, earlier, the last couple of years, they were going to try to get away from doing that. They said they needed to move to more of a service economy. They realized that there was a diminishing return and how much debt they can how much debt could fuel the economy, and they were trying to get away from that. They thought they'd reached a Minsky moment, and then the tariffs kicked in, and they were counting on all that additional revenue to come in, and so the companies that were adversely impacted, they had to give them tax breaks, they had to extend loans, give them more money just to keep them going. But China needs to grow. And so they decided, well, forget this idea, deleveraging. We're not going to be able to do that. So let's do some more infrastructure projects, but not the big type ones. Let's get some local ones done, get some parking lots built. And well, now China came out yesterday and said they're going to spend 100 billion yuan to boost employment, state council. People don't understand. A lot of people get their information about China from gold pumpers who just want to tell you China to crush the dollar because China likes gold and Sun Tzu. Yeah, China's in a lot of trouble right now. So maybe Trump is thinking, and maybe is that, look, if we start to print too, I mean, this is lunacy, but it's somewhat the idea that Reagan had with Russia, that if we just go on an arms race, when the idea that the advisors were telling Russia, I mean, the United States, was, look, Russia's got a lot of stuff, we got a lot of stuff, they got probably more than us, so we better cut back, we better go meet with them, and we better cut our arsenals. And Reagan said, nonsense, we'll just make more and we'll bankrupt them. And they also, that's ridiculous. So maybe Trump is thinking the same thing, that will allow QE China and drive them into the ground with debt. Well, maybe driving the U.S. into the ground as well. I don't know. It just seems a very strange way of approaching the economy, because when he wasn't president, he was always talking about how unsustainable the debt was. Now he doesn't seem to care. And I remember Obama saying the same thing before he got elected. He was saying, it's immoral to borrow from your kids. And then when he becomes president, they're asking about the debt, and he says, yeah, it'll be a problem, but not right now. It'll be a problem one day. Yeah, maybe someone else will have to worry about it. And that's typical when politicians get in. It's the debt is always not a good idea when they're not elected, and then when they are elected, debt's their best friend and they want more of it. All right, what else do we got here in the markets? We did that. Trump already covered. All right, I think we're ready to hit the we're gonna do, I don't know, you might have missed the Sunday announcement. We do Saturday night silver with Smaulgld, where we cover just silver, and that can be either a historic topic or general news or updates on some data. I've got some good gold topics coming up. I have some timely stuff, some new gold data, some historic gold information. So I'm going to hold off on that unless something is so timely and so newsworthy and shocking. I'm going to hold off on a lot of the gold and silver stuff and just focus on those exclusively on Saturday night silver with Smaulgld and maybe Seamus. And then solid gold Sunday with Smaulgld we'll do on Sunday evening. So Saturday, the weekends will be gold and silver pretty much exclusively. All right, let's move on and try to get into our topic. Now, we're going to talk about bubbles, but I want to talk about a lot of the stuff that's happened in the crypto space. So we'll take you back to 2017. And during 2017, there was a big rise in the price of Bitcoin. So the price of Bitcoin, it went from, I don't know, it was like $800, $900, all the way up to $20,000. And that happened, and the bulk of that rise happened, like, it went from 10,000 to 20,000 from the end of November to the end of December. And then in early 2018, last year, the whole thing started to unwind, and by December of 2018, the price was down to about $3,200. And that had shown a classic spike and dive chart. And that would indicate that the Bitcoin, the cryptocurrencies, are in a bubble. Makes total sense. That's what it looks like. And a lot of people are saying it's just like the tulips and it's Beanie Babies and the South Sea Buzzle and so on. And one of the things I noticed is, even though we had that hyperbolic or parabolic rise in Bitcoin and then the flame out, something happened that I thought was unlike a bubble, any bubble we've ever seen. Because generally after a bubble, if it is tulips, you just don't hear about it again. You never see the tulip craze. Never. It happened in 1635. There hasn't been a tulip craze since. Beanie Babies, they're not coming back. So there's a certain type of bubble. The South Sea bubble, that was a particular enterprise. People got excited about it. It's never coming back. It's finished. So there's those kind of bubbles where people get excited about it, for whatever reason. The speculation takes over. The frenzy gets in there. And people realize, why the hell am I holding on to these tulip bubbles? They're not worth $10,000 each. And a lot of people looked at the cryptocurrency and they said the same thing, that, wow, why did I buy this string of digits for $20,000. I'm screwed now. I'm out of here. It's gone. And you do see in any bubble, there's a realization that what I have here is overvalued. There's no way anyone's going to buy this .com stock, this tulip bubble, this tulip bulb, these South Sea shares, my silver, my gold at this price anymore. And then boom, it gets sold and it's gone. My Bitcoin finished. Now, as I mentioned, there are certain bubbles that I don't call bubbles. I don't think that a gold and silver rise in 1980 and in 2011 was really a bubble. I think it was just what happened in the economy and with the inflation and the geopolitics of everything with the QE in 2011, that those prices just became overvalued. Now, they became overvalued to the point where they had a pretty violent sell-off, especially silver. Now, you could say it's manipulation, sure, but silver has not recovered since. But that doesn't mean that all interest in silver is now forever lost and silver is useless and there's no point in ever buying silver. No, it means that silver, from time to time in its history, spikes and dives. And that's pretty much the characteristic of silver if you look at it over a period of a few hundred years. It has periods of times where it spikes and it dives. Gold also has periods where it spikes but doesn't quite dive as much because it's a little more stable. But that's just typical of that. Real estate never used to spike and dive until the most recent couple of decades when central banks purposely manipulated interest rates in order to drive investment into real estate. So real estate generally wasn't a spike or dive, but we saw the real estate bubble of 2005 end in 2005, 2006, and then it got reflated. Certain real estate bubbles, like in Vancouver and in parts of Canada, it just keeps going up. So things like gold, silver, stock market, real estate, I view that less of it's not the type of bubble that means, okay, now no one's ever going to buy real estate, no one's ever going to buy gold again, no one's ever going to buy silver. When that type of bubble bursts, that doesn't mean the end of it. But then you have to distinguish that between bubbles in tulips, beanie babies, South Sea, a corporation where people get a specific interest in something and it becomes a bubble. So the question is, was the Bitcoin bubble, we'll use the word bubble for both, in 2017 more like tulips and beanie babies, or was it like gold and silver in 2011 or real estate in 2006 or the stock market in 1929? Well, let's take a look, because generally in the tulip and the beanie baby issue, you never see the bubble ever. It goes away. You never see it again. Now, there's a few things I want to show you, but then there's some even bigger news. Now, the bubble of Bitcoin and cryptocurrency in 2017 was clearly driven by people, individuals. It wasn't Wall Street bidding it up. There wasn't Silicon Valley pumping it. It were people on YouTube and individuals. It was the classic shoe shine boy, cab driver, just Bitcoin pumpers telling you is going to the moon, when Lambo, all that stuff, BConnect, classic pumping, but it wasn't really widespread. It wasn't like the .com bubble was widespread. You had people on television, Mary Meeker, you had that other guy who runs the Business Insider today. You had Wall Street all over the .com bubble, strong buy, super strong buy. You had Kramer, you had all the people out there pumping this and that, and that was a mega bubble. And it was somewhat of a NASDAQ bubble, but it was a .com bubble and had the full force of the media and Wall Street behind it. This most recent bubble, even though it went from 900 to 20,000, Bitcoin got to like 780,000, 780 $1 billion, whereas the dot-com bubble was trillions of dollars worth of market value that had just been pumped up. So normally, but when the dot-com bubble ended, most of the companies went away, and we were left with eBay, Amazon. But it wasn't so much the companies we were left with that survived the dot-com bubble. The dot-com bubble actually was a fundamental change in the economy, because while all the startup dot-coms, most of them faded away, today everything is dot-com. You have Smaulgld.com, you have Walmart.com, everything is .com. There is no, every business now is .com. It used to be if a company had a website. Every company of any size whatsoever is going to have a website. They're going to have e-commerce. Was a big deal back then when other companies weren't e-commerce enabled. It all sounds quite trite right now at the moment, but back then most companies did not have Sears. Sears didn't have Sears.com. So, .com, while it was a bubble, it was not a bubble where, okay, it went away, now no one's interested in .com anymore, no one's interested in the internet anymore, so let's just close up shop and throw it into the dustbin of history with the tulips. That's not what happened. The values went up, and they were misallocated. There were too many companies that had no business even being public. All they really had was a 19-year-old in a basement with a business plan and no money and .com at the end of it. And it was very similar to what we saw in 2017. A lot of ICOs. The white paper was the idea. They got trotted out. They got people on YouTube to promote them. This is the next big thing that was going to save the world, and it was a blockchain technology, and it went up. So in that sense, I think that the .com bubble is very similar to the crypto bubble. However, the crypto bubble wasn't anywhere near as big as the .com bubble, because the crypto bubble was clearly an organic bubble. It was just a bunch of people. It really had no institutional push behind it. Yeah, CNBC might have covered it, but remember, buying cryptocurrency was not as easy as it was to buy .com stocks. .com stocks became, what really drove the .com furor was around the same time you had a lot of companies, discount brokers, that had online trading. And you had E-Trade, which came out of that period, Schwab, Fidelity, TD Ameritrade, and people were able to go online and institutionally, through institutions, with a click of a button, they could buy pets.com, Webvan, they could buy all the, I can't even think of all the names back then, but they could buy those yahoo.com, AOL.com, Sun Microsystems. They could buy all those stocks with the full Wall Street analysis. Every one of those was a strong buy. Cisco, and that truly was a bubble that everyone participated in. Everyone knew about what was going in the .com space. The Bitcoin thing, not so much. Even today, there's people who really don't, they've heard of it, but they don't know what it is. Back then, in that bubble, everyone knew what .com was. It was a company that was on the internet, and everyone knew what the internet was. You had movies. You had AOL. You've Got Mail. It truly was cultural. Everyone knew for 3 or 4 years about the internet, and it was going to change the world. And actually, it did. Now, the companies that were claiming they were going to do it, like CDNow.com, they don't exist anymore. But that truly was something that was a massive bubble. It was one of the biggest bubbles in history, as was the real estate bubble, where you had, again, people used to just buy a house to live in, but you had pole dancers buying houses and flipping houses and flipping and stripping or whatever they were doing. And that was a massive bubble. And that was on TV. And there were seminars and webinars. You can how to flip your house and so on. And the big banks were involved. You could not buy a house without the big banks. And the big banks were doing the ninja loans and the liar loans and so on. So you can see the real estate bubble and the .com bubble had all the institutional support of that bubble, and they were making a fortune. Who was making a fortune in the dot-com bubbles? The Mary Meekers, and I can never remember that guy's name, the blonde guy who is, I'm going to look him up right now. He pled guilty to a felony. He had, what was his name? Mary Meeker was the female, and this guy, Business Insider owner, founder, this guy was another one, and they worked, Henry Blodgett, that was his name, and Wall Street was fully behind the dot-com bubble. They were out there with Mary Meeker, strong buy as the analyst, Henry Blodgett, strong buy, and these were companies. The only reason they went up was because they got Mary Meeker to say strong buy. And if they couldn't get her, they went over to, one was at Morgan Stanley, one was at JP Morgan. They're all the different firms here. I don't know which one was Henry Blodgett at. Let's see. It doesn't matter where it was. They had the big Wall Street firms, and you needed, in order to get your company, which wasn't making any money but had .com behind it, you had to get a Silicon Valley company who was willing to throw $5 million into your company, or $2 million. And then you had to get Wall Street to take it public. And then once it went public, you had to get Mary Meeker to say strong buy, and you were off to the races. So you could see there was a whole infrastructure, institutional infrastructure, Silicon Valley, Wall Street, that drove the internet bubble. When the internet bubble burst after 9/11, it was already bursting before then, well, then Greenspan said, we need a housing bubble, and the housing bubble got the full participation of the banks. Idea was lower the interest rates, and then Congress said to the banks, you got to loan money to everybody. It's discriminatory if you don't. And then banks figured out all types of derivatives, and they figured out that they could package up the risky loans, but if you put them all into a portfolio, it was kind of a spinoff on the Michael Milken, that junk bonds in and of themselves were bad credit, but if you took 100 of them, your default rate, even with a default rate, you'd do much better off than 100 safe bonds, because maybe 2 of them would default, 3 of them would default, but overall your rate would be much higher than if you bought safe bonds, but you'd have pretty much the same safety because there's safety in numbers. They're not all going to default. And it was the same idea with these crappy loans that they had made in massive amounts. I mean, they were making a fortune. There was a company called Countrywide that just was pouring out loan after loan after loan, and then the banks were scooping them up, packaging them into mortgage-backed securities, and then selling them all over the world. In Norway, you've seen that movie. Okay, so the point is that the dot-com bubble and the real estate bubble had the full participation of Silicon Valley, Wall Street, the media, and even the government. I mean, the government was, in a sense, behind the internet, and they were also, in a sense, behind the policies that encouraged the loans to pretty much everyone, the real estate loans, and that drove both of those higher. Okay. And we know that, as we mentioned, there's still an internet, and the internet is bigger than ever today than it was back during the dot-com bubbles, and we know that people still buy and sell homes. And in fact, the home prices are almost back to where they had fallen. So both bubbles, they were not tulips or beanie babies. People didn't forget about the internet when the prices came down. They didn't forget about real estate when the prices came down. But they did forget about tulips and beanie babies. But let's take a look at some of the things that have happened since the crypto bubble burst. Now, if the crypto bubble was like tulips and beanie babies, well, then you wouldn't be hearing about it anymore. Then it would be over. Totally over. No one would be talking about it. It wouldn't be a concern. It'd be nothing. But that's not what's happened. In fact, we see more interest, and I'm going to give you a few examples. And I've been mentioning this to you guys for over a year, since the bubble burst, that the interest in the cryptocurrencies and in the space has not decreased. In fact, it's increased. The amount of capital formation, the amount of projects, the amount of innovation has increased since the bubble burst. Here's just a quick example. And the ATMs are not any big portion of the Bitcoin ecosystem. However, look at 2018. That's the peak of the bubble of cryptocurrencies when everyone was in and it was $20,000 for a Bitcoin. Since 2018, January, when the bubble burst, the number of installations of these machines has gone from 2,000 to 4,700, which means it's more than doubled. Now, you don't get that. When the tulip bubble bursts, or the beanie bubbles, you don't see kiosks popping up all over the place trying to sell you more tulips and more beanie babies. They all shut down. In Holland, you wouldn't see people trading tulips anymore, other than people wanted to go buy tulip to plant in their backyard, but you wouldn't have this mega trading going on. This is just one example of what's happened since 2018. This is a retail thing too. Remember, the people that are most or least interested in a bubble asset when it collapses are the people that got screwed by it. They want nothing to do with it, but yet there's a proliferation just in these ATMs. We're going to get into more substantial indications. So that means even on the retail side, which is all the bubble ever was. It wasn't an institutional bubble. It wasn't created by the media. It wasn't created by Wall Street. It wasn't created or induced by Congress or induced by Silicon Valley. It was just people. Now, the internet did help with YouTube, but again, it wasn't institutional YouTube. It was knuckleheads with YouTube channels pumping ICOs. All right, now, what's happening lately? A lot. And we've been talking about this. It was big news today. There's a company called ErisX. And this has only been formed in the last 16, 17 months, around the time of the bubble. And I tweeted this out today, bigger than you think. Read, ErisX launches crypto spot market on heels of new $20 million raise. Now, there's a lot there already. First of all, the fact that all these companies can still raise big money. Now, if you remember, at the end of the dot-com bubble, good luck going out to a venture capitalist or any entity that might lend you or invest in your company with a dot-com business plan. Once the dot-com bubble burst, you could not say, I'm a dot-com entrepreneur and I'm trying to raise capital for my fork.com because I'm going to sell forks online. They'd look at you and you'd be gone. Well, today and since 2018, hundreds of billions of dollars have continued to flow in. Now, the only reason I mentioned this is just 20 million raised here. This company's raised probably over $100 million. But what is ErisX? Well, they launched today a crypto spot market on the heels of this raise. And the raise, again, it's $20 million. But there's this type of investment going on all over the place. But more importantly, what is ErisX? And why are they doing this? Well, they have about 24 investors. But look who's invested in, besides the traditional VC firms, look who's invested in the ErisX crypto trading platform. CBOE Global Markets. Now, that is the owner of the futures platform, CBOE. NASDAQ Ventures. I think you know who NASDAQ is. The big trading platform, NASDAQ. Monex Group. They also run an exchange. Fidelity Investments. Trillions of dollars under management. Trillions of dollars that are traded every day by, I think, 80 million clients have Fidelity investment accounts. TD Ameritrade, I think, has 12, 15 million accounts. They're invested in this crypto trading platform. Why? The bubble is burst. It's over. Well, this tells me that this isn't tulips and this isn't beanie babies. You would not see this type of investment with these types of entities if the bubble had burst and everyone was done with it. Now, why is it that they're invested in this? Well, the reason is, in my opinion, they didn't participate in the 2017 bubble. They had nothing to do with it. They made no money off of it. People who made money on 2017 were individual traders trading Bitcoin, Smaller companies that rose as a result of the massive trading like Binance and all the big current exchanges like local Bitcoins and Shapeshift, but then also the centralized ones like Binance and Bitfinex and Coinbase and Poloniex and Kraken. They're the ones who made the money. None of Fidelity didn't make any of this money. TD Ameritrade didn't make any money. The Henry Blodgetts and the Mary Meekers don't exist. You got Tone Vays and Roger Ver. You don't have major Wall Street analysts following cryptocurrencies, getting paid fortunes to recommend their favorite tokens. That's all done by, as I said, knuckleheads on YouTube promoting their favorite stuff. There was no institutional backing whatsoever of the 2017 bubble. So my thesis is that Wall Street, as we've seen, loves and lives off of a bubble. We had the dot-com bubble, then we had the real estate bubble, then we had the everything bubble. And it looks like when you get companies like CBOE, NASDAQ, Monex, Fidelity Investments, TD Ameritrade, that's just this one entity invested in this. Well, it looks like to me that they realize that there is money to be made and a bubble to be pushed. And here's RSX talking about, and they have plans. They're not just going to do a spot and regulated futures market. Then they're going to launch a regular where you can buy and sell and you can store. And there's dozens of these companies, all backed by big Wall Street money. That's exactly what they want to do. They want to get into crypto trading, crypto storing, crypto staking, crypto lending. They want to do it all. And they know that there's huge money in this. And this is just an announcement, they public launch of their spot market, but they're still raising money because it's not just going to be this spot trading in just Ether and Bitcoin. They want to add Litecoin and XRP and all the other ones. And eventually, that's where this thing is headed, in my opinion. It doesn't look like, they're just announcing more money in this particular one here. Now, it's not just RSX. We talked about TD Ameritrade. We got E-Trade also coming out. They want a piece of this action. They want the trading profits that Coinbase makes and so on. The other thing interesting about, and we talked about this the other night, about RSX, was the whole Tether and Bitfinex thing that we talked about last night, how I was saying that the companies that have bit licenses are in a sense protected, and we went through those companies. They were Coinbase, Goldman Sachs backed Circle, Gemini, Paxos. All of them had stable coins, and all of them were competing with Tether. And the New York Attorney General went after Tether, and now it looks like Paxos is issuing more of their FDIC backed, dollar backed stable coins, 100 million of them. Well, on RSX, not only do you got NASDAQ, Fidelity, TD Ameritrade, CBOE involved with them, their new board members that they added are part of a company called NYDIG. And guess what they have? They have a New York bit license. We also see backed, BAKKT, which is backed by New York Stock Exchange owner. You getting a picture here? This is all the big players on Wall Street. New York Stock Exchange owner, combined with Microsoft, Starbucks, and Boston Consulting to also do a big trading platform, physically delivered, a Bitcoin, Bitcoin storage, Bitcoin conversion, so you can use it and spend it at Starbucks. They know that this is big money, and that's just another entity. But all the entities are now involved. You got the New York Stock Exchange, you got NASDAQ, CBOE, CME already has a Bitcoin futures, Fidelity, TD Ameritrade, E-Trade. We'll probably hear from Schwab shortly. Goldman Sachs is involved through investments with Circle, which also owns Poloniex, which also issues a stable coin. You get the picture here. They're all involved in this, and they've done it incrementally, and it's all been done pretty much. The bulk of all this investment, the bulk of all this activity happened after the market collapsed. That would never happen. You would never see this type of activity after a tulip bulb collapse or a Beanie Baby collapse. You only see this in areas where, like in gold and silver and real estate and internet where they expect there to be money to be made in the future, not on a one-off. So the point is, this is not a one-off. Bitcoin went up, it came down, that's it. That's all I need to know. It's collapsed, it was a bubble. No. This company here, I never heard of News BTC, but they make the point, institutional love for crypto confirms Bitcoin isn't a bubble. Now, it just depends on your definition. I think the price was in a bubble, but it's not the bubble of the tulip type. The fact that you still have this interest, increasing interest, not just in ATMs, but in institutions trying to carve out a piece of all this. Now, look at this one, MasterCard. This guy noted this, a good catch here. Litecoin Moses is his name. He sees that MasterCard has filed a patent in October of last year to manage fractional reserves of blockchain currency. You can see what they're doing here. These are the big banks, the big payment systems, the big platforms, exchanges. All they're trying to do, they're trying to replicate all the money making, the lending, the hypothecating, the fractional reserving, the storing, the custodial arrangements, the trading that they have in other assets. And here you go. Look, it says right here, a method, this is the patent they MasterCard filed for, a method for managing fractional reserves of blockchain currency, including storing in a central account a fiat amount associated with a fiat currency, storing in a second central account. I mean, this is, if you think that this is a bubble like tulips and it's just going away, all this money and all this effort would not be pouring into this. This is not tulips. Now, that doesn't mean that Bitcoin is going to go higher, any particular cryptocurrency is going to go higher, who knows? But it means that they have earmarked this as, I don't want to say they've earmarked it to produce a bubble, but it looks like they've definitely earmarked it to make a lot of money off of it. Now, there's a guy, Anthony Pompliano. He is a venture capitalist. I can't think of the name, but he's always saying long Bitcoin, short the bankers. Now, that ties into a lot of people that are into Bitcoin. I think end the central banking and Bitcoin's going to change the world and overthrow governments. And okay, and he's kind of playing off of that. But at the same time, he's recognizing that institutions are moving in on this space. So we might want to change to long the bankers and long Bitcoin, because this looks like, and what's antithetical to the whole thing is Bitcoin is not supposed to be an institutional asset. It's supposed to be peer-to-peer. It's supposed to be, quote, for the people. But I think you could see the institutions are all over this. They're trying to get the right type of regulation in place so they can attract all the institutional investors. And then they'll just have the same infrastructure. They have the analysts, you have the storage, you have the trading, you have the hypothecation, you'll have the lending, the staking, all the things that they do, the trading platforms. But here, New York Stock Exchange, this is backed, buys Crypto Custodian, the latest push to offer Bitcoin. They've raised a lot of capital, a few $100 million. This is backed. This is New York Stock Exchange. This is Microsoft, SoftBank, and Boston Consulting. They're trying to set up a platform as well. What else do we have here? TD Ameritrade. They're already testing Bitcoin and Litecoin. This is Charlie Lee noting that TD Ameritrade is testing both Bitcoin and Litecoin trading on its brokerage platform. If the bubble was over, they wouldn't be bothering. They're prepping this. I think they want this bubble. I can't think of any other bubble they can push after this. This is where they put all their eggs already. Lots of money in here. Well, here's just the point I made today. Well, here's over-the-counter surge. These are institutions buying Bitcoin. Buying activity and the over-the-counter brokers may signal increased institutional interest in crypto, which could add to the next bull run. See, they're talking about the next bull run. There is no next tulip bull run. There is no next Beanie Baby bull run. And here's what I noted. Ever see more capital flow into a bubble after it bursts? No, you don't. The only bubbles that you see money flow into after they burst are stock market bubbles, because that's unlike the Beanie Baby or tulip bubbles. Gold and silver go up, they go down. It's not like everyone walks away and says, well, that gold stuff was nice in 2011. Let's just forget about it. Yeah, silver was cool in 1980, but there's no use for that anymore. No, those are bubbles, but they're in a sense part and parcel of what those assets go through. They go up, they go down. I like to say silver's a spike and dive metal, and seems so far Bitcoin has been a spike and dive crypto. Had a similar rise in 2013. It rose from $80 to $1,000. That's when I got caught up in it, following it, and I said, okay, well, it burst. There it is. That was nice. Isn't it interesting? Cryptocurrencies, Bitcoin, waste a lot of electricity, confirmed transactions, nerds playing with it. It's over. Next, well, 2014, 15, and 16, continued interest in cryptocurrencies, continued investment. And the next thing you know, it goes from $800 to $20,000. It collapses, and then you get a lot of people reacting to it the way I did in 2013. That's it. It's over. Bubble. Next. Let's move on. No. It's done it 3 times already. It is definitely not tulips. It's not Beanie Babies. And the reason I say that is, in 2013 and 17, those, you could have written those off if you didn't see this interest, this institutional interest that has happened since then. And you're going to see the second week of May at this consensus convention where you have eBay, a whole bunch of Citibank. They're all at this convention. It costs $2,000. There's going to be like 6,000 attendees. They're not all attending that because it's a has-been. They're not interested in cryptocurrencies anymore. This will probably be the biggest one that Consensus has put together, and it's the whole blockchain week, and you'll probably get some big announcements out of that. All right, but again, you don't see more capital flow into a tulip-style bubble after it bursts. You don't see continued interest, especially, you're talking about here in the biggest players. Here's just another announcement of, I don't know what this one is, $6 million. Crypto data firm raises $6 million. Didn't even read this story. But I see these every day. You see this company raising $10 million, $20 million. Again, doesn't happen. Got cut off again, but let's take a look at this with this Venezuela thing that's going on. And we'll take a look at your questions or comments. Yeah, I'm here, Maple Hedgehog. I just got cut off again, but I don't think we missed much. All right. So what I was saying is that you don't get this type of investment and interest after a bubble burst if it's a type that's tulips or Beanie Babies. I was just moving on over to, this is local Bitcoins Venezuela, and you can just see the massive increase. But this is a function not of, this is a use case for Bitcoin, but it's probably not a global use case where the whole world is collapsing. But Venezuela is having a lot of trouble. They got capital controls. Their own currency is complete garbage. It's not worth anything. And local Bitcoin trading is increased dramatically. But that's also in addition to the trading of remittances of Bitcoin and Litecoin on the platform that Maduro himself has set up to bring cryptocurrencies into the Venezuelan country. So again, if it's like tulips, they weren't sending tulips from Holland to Italy and then from Italy to Spain in 2 decades later. I mean, once that bubble burst, that was the end of it. Now, what else do we have in the... Okay, the other one is, and this is what I say, there's an expression, demographics are destiny. And a lot of people, just depending on your age, they've dismissed the whole cryptocurrency thing. It's a bubble, it's a bubble, it's a bubble, it's a bubble. You've heard that so many times. And part of that is based on age. And there are young people also think it was a bubble and they want nothing to do with it. But here's an interesting thing. And I've made this point even well before, I've been covering crypto ever since we've been talking. But one of the things I like to talk about is how millennials and younger don't have the same attachment to physical items, tangible items, intrinsic value, all that kind of stuff. They don't collect coins. They don't collect baseball cards. They don't have record albums or CDs. They don't have VHS tapes. They don't even have DVDs. They don't have books. They value things that are digital. They don't even own stuff. They Uber. They don't buy cars. So their concept of what's valuable is different to someone who's older. A book collection, a record collection, a CD collection, a furniture collection, a car collection. Not only do they not have the same probably access to wealth that older people have, they also are not as interested in those things. Maybe one is causality, but I actually think it's because the world is more digital. They don't view holding items as a valuable thing. They view experiences, getting on a plane, go to an Airbnb, getting an Uber to get there. They don't own the place. They don't own the car. They don't bring coins with them. Everything is on their phone. So, of course, they're going to value digital money more than older people are. Older people have a hard time understanding that. Well, this guy put out a name is Spencer Bogart. Did some type of survey. I'll leave the link in the show notes tomorrow. It says nearly half of those 18 to 34 think people will be using Bitcoin in 10 years versus 16% of those over 65 and 26% of those 55 to 64. So if you are hanging around 65-year-olds or older, or you're hanging around 55-year-olds, you can scoff at this and say, that's not going to happen. Even if you're forward-looking, you just, in your experience, why would anybody want a string of digits? Doesn't make any sense. Well, that's because you didn't grow up with the string of digits having any value. You grew up owning stuff and buying stuff and using cash and coins to buy stuff. You didn't wave phones and at something and get a video game. It's just a different understanding. You stacked coins and counted them and brought them to the bank in rolls. They don't do that. They don't have that experience. So they're viewing, oh yeah, there's money on my phone. That doesn't make sense to somebody who's born in 1940. What do you mean there's money on your phone? There's no money on your phone. No, there is. And that's very hard. So they don't have a problem, 18 to 34-year-olds thinking, half of them thinking, yeah, sure, everyone will be using Bitcoin. A 65-year-old is either what's Bitcoin or why would they do that? So let's look at a couple of other things in this survey. But again, the bubble is not going to... And the other thing is, all of the boomers and older, when they pass on, they're going to give their stuff to the millennial kids or younger kids. What are they going to do with it? They're going to sell it, and some of them are going to sell it for, quote, money, and that money is going to be, in many instances, Bitcoin and other cryptocurrencies. Here's some more on this demographics or destiny. Well, here's a question. Do you think gold or silver will be used for a means of payment in 10 years? Ask that. And I guarantee you won't get more than 5% of millennials saying, yeah, sure, I think that's what we're going to use. Or as a widely held asset class. See, the problem is I think people, they hang out with their own type too much. So if you're on a silver channel or a gold channel, gold is money, period. You can't even imagine how anyone would think that gold is not money or silver is not money. And if you're a millennial or you're a Bitcoin maximalist, you can't even imagine why someone would value a shiny rock. And I think it's in order to analyze the markets, you can't look at it from your own point of view and your own experience, because your own experience isn't what's going to shape the market. What's going to shape the market are millions and billions of people, many of whom which have a different view of the world than you. And that's what I see all the time. People arguing their own points of view as if they can control what's going to happen in the world. You hear Peter say, when the world realizes I'm right. No, the world isn't going to realize you're right. That doesn't happen. When the world realizes how smart I am and how good my channel is, I'm going to have 40 million viewers and I'm going to be big. Oh, good luck with that. All right. What else do we got before we get to your views? That's what we got to hear next. Demographics or destiny. Well, here's that chart here. Yeah, you really can't see that very well. All right. So what do you all think about whether Bitcoin and cryptocurrencies are a bubble Are they more like a tulip bubble, a beanie baby bubble, or are they more like just the normal ebbs and flows of other assets like gold, silver, and real estate, and other assets that have had stock exchanges that have had parabolic runs? And also, what do you think of my theory on Wall Street getting in on this and actually trying to create an institutional structure whereby they can offer all these services and make a fortune promoting them? And one of the reasons I think that they will is in each of those bubbles, .com, they ran up against the valuation bubble. At some point, whoa, why are you recommending this stock, Henry Blodgett or Mary Meeker? Why is there a strong buy on it when it has no revenues and it has no profits? Well, because it has 16 eyeballs and it could double the next week. Well, at some point, a lot of people said bomb to that. So you had the valuation issue with stocks. With real estate, the same thing. They could loan money, liar loans and ninja loans and all that. You still need some income or you can make it up, but then what's going to happen? They can't pay the loan back and everything collapses. To me, the best thing about cryptocurrencies is you don't have a valuation issue because it's worth whatever you can pump it to be, and there's no collateral. Well, there is, but I mean, it's not like people are living in it. It's in some storage facility that they paid, I don't know how much money to cold storage it. I mean, to me, it's the easiest thing to get off the ground. They just need the proper regulation. All right, let's see what the Smaulgld mug stackers and game changers are saying. Let's go over here. Hope I don't lose you again. Let's see what happened. Come on. We getting... All right. Maple Hedgehog, nice to be not working, able to kick back with a coffee and check out a live stream. Well, welcome, Maple Hedgehog. Carlo Joseph Di Marco says, buonasera tutti, or buonasera a lei. All right, McCain is here. Let's see. Philip McCain says tulip bubble. Remember, I'm just going through the comments, and I'm not going to comment on all of them. I'm just going to look to see where you've written Smaulgld, and then I will comment on that. Okay, Jack Smaulgld. Don't you find it suspicious that Trump says all these wonderful things about inflation being low? Well, it's self-serving. What he wants to say is that it's low, and therefore let's lower interest rates because we don't got to worry about it. I don't know about it's suspicious. It's self-serving. Anything any politician says, if they're trying to get you to vote for them or get you to support them, they're going to say self-serving things, and they're going to cherry-pick data. I think that's all he's doing. I don't think it's suspicious. But you can tell me what else you mean by suspicious. All right, let's see. Tether has always been pretty bleeped. I don't think anyone believed that audit. Yeah, I mean, Tether, we didn't get into that, but I don't think Tether's an issue at all. As I mentioned, I believe that the New York Attorney General issued that report in order to trash Bitfinex and Tether because Bitfinex, first of all, it's a Hong Kong company. It's got nothing to do with New York. And it doesn't have, and it refused to get a Bit license. And we have 5 companies that have Bit licenses that all have stable coins, all compete with Tether. So that was a good way of running them off. I think that Bitfinex and Tether, I actually saw a story on it. They said the same thing I did, is that it's the Mt. Gox of stable coins. It doesn't mean that the whole cryptocurrency ecosystem is going away because of Tether. Lewis, your chihuahuas are going, that is not a chihuahua. It's much bigger than that. All right. Dollar Bill, my issue is with the money laundering, drug dealer, mafiosos running things in the background. Issue with what? I mean, most of your crime, and the FBI statistics will tell you this, and so were the British intelligence services, it's committed with dollars. And money laundering, it's the best thing to have. And also, I think they had a chart. They showed that Bitcoin is like the 9th most used. People use plane tickets. They use gift cards. they use laundering money through Bitcoin is not good because you can actually track it through the blockchain, and when you commit a money laundering transaction with cash, once the cash changes hands, unless there is some record, either I guess a surveillance or they're marked cash, you've gotten away with it. With Bitcoin, you may think you got away with it, but they can track it eventually. So I don't think that that's really an issue. I think that's been overplayed. I think when Bitcoin was first came out to people's attention in 2012 and 13, it was touted by all these anarcho-cow is private, you can do what you want, and the dark web. But with this institutionalization, it's not. I mean, if you buy a Bitcoin on Jack Dorsey's Square, who also has a New York Bit license, there's nothing private about that. It's no different than if you buy a stock, you buy Apple shares on Fidelity. Everyone knows you bought it, and when I say everyone knows you bought it, what I mean is that it is not a hidden transaction. All right. What else do we have tonight? You guys are having a convo amongst yourselves. That I can't do. You guys probably won't even listen to me. It looks like you're having a great time. Okay, CoinsAZ says hello, everyone. All right. That's about it. Maple Hedgehog, Smaulgld. This channel bursts my mental bubble. So I'll tell you what happens after the bubble bursts. Growth, adoption, Darwin, Tai Chi, Zen, full circle objectivity, coffee, and food for thought. All right. Fiona, Smaulgld. The younger people are not even dressing up. They wear simple clothes, Steve Jobs styles. No brand, no designer, no jewelry. They have zero interest in the stock market either. Right. Which means if they can just pile $300, $400 of crypto on their phone, that's what they're going to do. I mean, it doesn't seem to me, that may seem alien to people. Like, why would you do that? But it's not, why would you do that? It's who does that and how many of them do that. And there's a good chance that a lot of them are going to do that. Well, then that's where you follow the money. You don't see, people argue with it. They don't understand. No, I guess they don't. But it doesn't matter that they don't understand. The world doesn't understand I'm a genius and doesn't pay me millions of dollars. That's just the way things are. Arguing about it isn't going to change that. Tossing Molotovs. Cryptos are for the young that don't work much and own nothing. As a boomer, I plan on buying more crypto. That's strange. Let's try to analyze that. Tossing Molotovs. Cryptos are for the young that don't work much and own nothing. Well, I get the idea of not owning anything. If you're not owning something, you're not burdened by owning a cryptocurrency because you don't even have, there's no possession of it to take. But then you say, as a boomer, I plan on buying more crypto. I don't know what that means. All right. Dollar bill, blah, 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 propaganda. Two wrongs don't make a right. I don't know what he's talking about there. Anton, you can claim your bitcoins. I don't know what that means. All right. Oh. You're I thought you were making a comment. Yes, you can. There's all types of privacy things you can do with Bitcoin. That's true. I thought you were talking about the tactile concept that younger people don't like Bitcoin. I mean, don't like coins, but that you can actually have a Bitcoin and clean it. I get you. Okay. Mixing Bitcoins and conjunct. Yes, that's right. Yeah. Okay. What else do we have? Anything else? All right. That's it. I want to thank everyone for joining me. If you are not a Smaulgld patron or a Smaulgld Mug Club member on Subscribestar, please consider doing so and helping out the channel. Remember, we have no ads on this channel. We're supported solely by mug sales, donations, Bitcoin and Litecoin. You can see it on your screen. Hold up your phone and make a quick Bitcoin or Litecoin donation. You can also support Smaulgld by sending, or even just sending me a note. You don't have to send any money, but it's nice when you get money in the notes, which those notes often do accompany some worthless fiat currency. I once got some silver, which was nice, to P.O. Box 714, Dover, New Hampshire 03821, or make a small-time donation via PayPal. And also consider supporting the advertisers on the Smaulgld channel. on the under this BitChute and under this YouTube and over on the Smaulgld.com website, where we've got a few bullion dealers, Golden Eagle Coin, Money Metals Exchange, SD Bullion. There's affiliate links on there. If you click on those links, you go straight to the sites. You pay no more, no less than if you visited those sites directly, but Smaulgld gets a small commission, so if you are interested in buying precious metals, not investment advice, do so. But I will get paid. And someone asked me today, if we click on any of the links, let's say there's a link there to buy Mexican Libertads, and you go to the site and you don't buy the Libertads, but you buy something else, yes, indeed, I do get credited for those sales. So please help out the site. If you're shopping anyway, please remember to do so by clicking on those links. There's also some coffee and there's emergency food over on the Smaulgld site. The links are also below this BitChute and YouTube. Thank you very much for joining me tonight, and we will see you tomorrow. Tomorrow is already Wednesday. Have a good night, and I'm going to give you the 10-second Bernie countdown if I don't hear from you. We're signing off. Okay. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1%, 0. Have a good night, because everything should be free. Who is this guy?